Are we live?
Yep.
All right. That's it. Everybody can see you.
All right.
Here we are.
The 4 people that are watching.
You're listening to Inside Real Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
Good morning, everyone. Paul Apostolakis, Salvatore Kuzmano, Brad Weisgerber. We are Inside Real Estate. Very special guest today. We've got SVP. This is a really long title, by the way, Brian.
Just call me Brian.
It's Brian View. He's the SVP of Third-Party Originations, Wholesale and Correspondent Lending at Flagstar Bank. How are you, sir?
Doing well.
Good
Morning. Thanks
Good.
for having
Really
me.
long title.
So it's long. Yeah, it's a really long
I just
title.
go by Brian.
Is it like an acronym that you can put in place?
That's
now?
a lot.
Just
of
Brian.
That's
Just go
I
by
think
Brian. Yeah,
yeah.
Crazy.
Good.
Brian's got the sexiest spelling of the word view I've ever seen. If you look at his last name, it's really interesting.
Well,
So
you gotta say how you spell it now.
I mean, it's VIEAUXIGA. No, I'm kidding. Brian, obviously, you're at Flagstar. First and foremost, to the audience, thank you, everybody, for subscribing, checking in, doing all the stuff. And all
Rate
our
us.
Rate us. We love it. iTunes, all that stuff, right?
Swipe
Right.
right. Is that what you?
I don't know, dude.
Left.
Is
I
right the
don't-
right way?
I don't know.
Just
I'm
know
married.
which way do we
Don't have
swipe,
that.
right or left? For good. Is right good?
I don't know.
I'm 50. I have no idea.
You know,
Somebody
what
out there
you guys
leave
are
a comment
talking
and
about.
tell
we
us.
didn't have swiping anything. Thank God I would have got swiped the other way of good.
I would have swiped down.
So anyway, Flagstar Bank. I just want the audience to understand that we're in a hub of mortgage companies here in Michigan of like Quick. Everybody talks about Quicken. Everybody talks about United Wholesale Mortgage. You know, quietly, it's almost like Switzerland. You guys, right? You guys are like a top 10 lender in the country. You are a bank. You do a lot of good stuff on that side, and you're in the Metro Detroit area. And you don't really, Flagstar isn't in that grouping a lot of times, and I think you should be, right? Because you guys do a lot of good things in the mortgage market, in the banking market. You guys do a lot of things with wholesale lenders. So, you know, it's interesting that like we have you on today because we've had everybody from the top 2, and then all of a sudden it's like, well, what about Flagstar, dude?
Sure.
Right?
Right in our backyard.
Yeah. So you guys, just to give you guys some background, you guys are based out of Troy, Michigan. You guys recently acquired 52 Wells Fargo branches, Desert Community Bank out of California. You guys just picked up Santander's lending portfolio recently. In 2017, you guys did $35 billion mortgage volume. That's a lot, right?
For sure.
That puts you right up there with the big boys. So talk to me a little bit about your position at the company, what you do, and kind of what Flagstar's initiatives are right now for the mortgage industry for us that would affect a company like us.
So my role at Flagstar, I manage all of our third-party originations. So it's all of the mortgage business that we acquire, fund through mortgage brokers and mortgage correspondents, right? Mortgage bankers. We buy loans from other community banks, credit unions, et cetera. And so our you mentioned the $35 billion in volume. 70% plus of that comes from correspondent, and then probably 20% is mortgage brokers, and then the remaining 10% or so is our retail business. In addition to the acquisitions that you mentioned, Paul, we bought a retail lender, Opus Advisors, in Northern California about 18 months ago. And so that's helped us kind of grow our retail footprint, which also worked out well when we did the Desert Community acquisition, the 8 branches in the high desert of LA County. And so you mentioned the Wells acquisition as well. That's kind of the most recent acquisition that we've done, and that was that really helped us grow our deposit base.
Yeah.
Roughly $2 billion in deposits
That's a lot of money, by the way.
to add to the bank, right?
Why would they give that up? I'm just curious.
So, I think for Wells, I think the way they looked at their national footprint, some of the markets that they were in, they felt like they were probably better served concentrating their resources in the bigger markets. And then, it's one of those deals when you look at the bank footprint for Flagstar. So we had, prior to that acquisition, we had 102 branches here in Michigan, primarily southeast Michigan.
Yeah.
And so the 52 branches that we acquired from Wells really kind of filled in the gap in Michigan. So it was northern Michigan, even into the Upper Peninsula.
Well, that's where Brad's from.
All right.
Yeah.
So you're a Youper. I love it.
I'm a Youper, yeah.
You can tell. Look at it.
I mean,
Man.
So in addition to the northern Michigan branches, there's some branches in Wisconsin,
Yeah.
Ohio, Indiana. So it just really made a lot of sense from our geography. And again, it was a very good acquisition for the bank in that it brought some meaningful deposits to our balance sheet.
Yeah, and just so the audience understands, that when you say correspondent, and I think that's something a lot of people don't totally understand, it's basically we're a correspondent and we're a broker. We kind of do both, but there's something called mini correspondent where we have a line of credit. We actually fund the mortgage through our name.
You're a lender.
You're a lender, right? And then, but what's happening is we're not fully delegating, meaning we're not actually doing the underwriting.
We're not selling directly to Fannie and Freddie.
Right. It's already delegated to, let's say, Flagstar or United Wholesale, whoever it is. And then once we fund it, they basically are saying we're gonna buy it off your line.
Right.
And then we're going to package it and sell it on the secondary market.
Right. So there's a lot of that. You probably have some. You guys do a lot of stuff with warehouse lines that people pick up on. Like a company like us can get a warehouse line and kind of fund our mortgages through you. The interesting thing, guys, and I don't know that a lot of people know this, and not many companies made it. It's interesting because it's rare that Flagstar has been in the wholesale lending to the broker community since the 80s.
That's right.
Right, and a lot of companies in the wholesale space, did not make it much longer than like 5 or 10 years in total. So talk to me how did Flagstar create a resiliency to the market to where you guys continued the wholesale channel even through 2008? That was like the implosion of everything.
Yeah. So 2008, I happened to I worked for another bank at that time, IndyMac Bank.
Oh, nice.
So,
they're gone.
They're gone.
Man.
So I directly lived through that.
Yep.
That cycle, that crisis, if you will,
Anomaly,
and was personally impacted, right?
Yeah.
And so I'm born and raised in Michigan.
Yep.
So first and foremost, Michigan's home for me. I've always lived here. I've worked for companies that are out of California, out of St. Louis, out of New York, but always lived here.
Yeah.
And I always knew Flagstar as a competitor, and when I was with another large bank as a customer, and always had just admired the company, the management, the business that they'd built up. And when I had the opportunity to join the bank in 2012, I actually came in and ran our retail business at the time.
Okay.
And then moved over into the third-party business, which is really where I spent most of my career.
Right.
2 years later. But kind of going back to the late 80s, Tom Hammond, who was the founder of Flagstar, had a company, Hammond Mortgage. And he had the foresight to acquire a bank. So, Hammond Mortgage acquired a bank out of Jackson, which became Flagstar Bank.
Yeah.
And so this was a mortgage company that became a bank by buying a bank versus a bank that buys a mortgage company, right?
Right.
So
Kind of rare.
A little bit different.
Flipped
for
around
sure.
a little bit, yeah, for sure.
And what I would say is that the Hammonds and the management team really stuck to kind of what made sense for the bank and didn't get into products that were probably front and center part of the crisis. So they stuck to agency eligible products, really stuck to their guns from a credit quality perspective. And really, as it relates to the third-party business, really did a great job managing third-party relationships and not allowing that type of business to cause problems for the bank. So just a hyper focus on doing the right thing is probably the best way to describe it for Flagstar.
Yeah, it's interesting because in our industry cell, we always talk about the non-bank lenders, right? That's kind of like the thing now. It's like most lenders, and what people don't understand is they're just massive correspondents. Or
Right.
they're getting money like we could be a non-bank lender if we had a huge line and we lended that money out.
Being a bank lender
is way different.
Yeah, and it has a lot of advantages, especially too when you're sponsoring the third-party originators. I mean, you guys have your own delegated lines, right? Which probably means something different than getting a third-party line and funding on that. And I mean, I know from when I was an AE at UWM, I had a lot of accounts out west, especially like Southern California. They were doing like $100 million a month with Flagstar, probably $70 million a month with Flagstar. It was crazy. And
we
they're like, sorry, bud. I mean, it's locked up. We got a $30 million, or we got like $3 million deposited with Flagstar. It's like, well, you can get a line with Gold Dome.
Right.
See you, dude.
Yeah, there's definite advantages that we have with our offerings. You'd mentioned some of the lines of business that we're in, and we've talked a little bit about warehouse lending, and just so the audience maybe understands a little bit more what that means. It's essentially we issue lines of credit to other lenders primarily
Talk
mortgage
right
bankers.
to the front.
And I'm new to this.
I just see Jessica out of the corner of my eye.
For the audience, just so they understand, we
Yeah.
literally have to put the mics in our mouth.
So warehouse lending is essentially offering a line of credit, a funding source for smaller lenders, mortgage bankers,
Yeah.
to be the lender, as you said, and those loans fund in their name. They're using their money, which they're borrowing from another institution.
Leveraging.
Yeah, and exactly right. And it gives that banker, that mortgage banker, some control of the process. And there's flavors of that.
Yeah, there's
business,
a spectrum.
right?
Yeah, there's a whole spectrum. Right?
In most cases, those lenders that we provide funding to will go to their lender, their investor, and submit a loan for underwriting, and the credit decision will be made by that investor, who will then purchase that loan off of that line.
So yeah, that's awesome. So, but historically, I'll give the audience a little bit of some kind of a perspective. So historically, we're a broker. We have our credit line, but historically, we've always
lender.
wanted to work. What's that?
We're a lender.
We're a lender, but we also can broker.
Yes.
Right. You always do that.
Don't cheapen us.
I don't know. Okay. All right. So
You have options.
we have options.
You have a lot of
we
options.
have a lot of options, which is good.
Yes.
It's great for the consumer. Now, we've always toyed with the idea of signing up with Flagstar. And as a broker or lender at the time, there were challenges that kind of were like, I don't know if it's worth doing it because we're like a smaller shop. There are some nuances that we kind of can, was a little bit more clunky for us to set up documents. We weren't super robust because to set up the ecosystem to work with Flagstar at the time was a bigger undertaking than just being able to plug into a system that was already grown. So talk to us about Flagstar going forward. I know that you guys have been really a big proponent of the broker model. Mm-hmm. Being that that's the case, what is Flagstar doing to become more palatable to the brokers across the country?
Yeah, great question, and I fully acknowledge your point in terms of doing business with Flagstar. And what I would kind of go back to is TRID, right?
Mm-hmm.
We have T-shirts that say TRID happens, and it happened, and we all had to deal with it in the industry. And being a bank and being one of the few banks at the time, and still that are in the third party in the wholesale space, we took a different path as it related to TRID.
More conservative.
We took a very conservative path. It was the right path for Flagstar for sure.
Right.
Yeah.
And this is where I tip my hat to companies like UWM and the vision that they had as they kind of came out of their past, and they really launched with TRID, right? And so
They pushed the envelope
For
with
sure.
what they could do. Yeah, their definition of what you could and could not do was different.
that's right.
Right.
And so for us, for Flagstar, we've spent post TRID, we've been focused on how do we adapt our model, how do we become more user friendly, if you will, to our clients, to our brokers. And so we've gone out and we've done listening tours. We listen to our customers. I'm always in the field gathering information. And probably the last 2 years we gathered as much information as we could. We obviously can see what our competitors are doing and how they're doing that. And so we're excited that this year we launched several enhancements to our kind of technology. LoanTrack, everybody kind of knows LoanTrack. It's been around for decades. And we've been really refreshing that technology, enhancing the deliverables out of that technology. So we talk about documents. The ability for a broker to generate an application package exists today in LoanTrack, which it didn't exist.
I don't know that a lot of people
3
know
months
that,
ago.
by the way.
Right.
'Cause
So
we didn't know. I didn't know that. Did you know that?
Yes and no.
Brad knows everything.
He
Of course,
does.
you can't ask him Brad anything. He just, I know everything.
So we've been
No, I
piloting.
don't.
So it's been a pilot. a
I knew
closed
you guys
pilot.
could do it. You're working on it for the broker side. I'm curious to see if you guys are going to allow it for the correspondent side, because a lot of times companies that kind of allow both,
Right.
they will say, we'll let you send out documents as a broker. Once you go mini correspondent or non-delegated, put on your big boy pants. It's throw you to the wolves
Right.
and see what happens, because they're looking for an out potentially to
They're
not
protecting
buy the
themselves.
loan,
They're
right?
protecting themselves. Right?
They don't want to take on the extra risk that put your
Yeah.
big boy pants on, and they don't really want to help you. So
So there's always going to be that element when you're a correspondent, whether you're a small lender, as a correspondent, or of the largest. You do have to have the big boy pants. At the
Yeah.
end of the day, that's kind of where the rubber meets the road. What we've always allowed for or offered is the ability for a correspondent to draw closing documents from our system.
Yeah.
And so, we as I mentioned, we're in pilot with our app disclosure package. We'll actually be coming out of pilot here before the end of the year and have a full launch right after the first of the year for all brokers. And then we're
Broker only?
today broker only. We have an active project that is working with our technology folks to allow the same accessibility to those documents to our correspondent clients. A little bit different. We've got the broker side is a little bit straightforward because they're disclosed in our name, and so we just have some IT work to do on that. But that'll be a early 2019 initiative for us.
It's interesting because I just from what you're saying, it feels as though that you guys are investing in the broker model, which is interesting. I think that speaks volumes because one of my questions was going to be how does Flagstar feel about the broker model going forward? Obviously, you're a bank, but you don't really compete on the same level, right? It's not like you like. I've never really gone against Flagstar in a deal that often, right? So
Mainly jumbos.
yeah, and that's another thing I was going to ask you. There's two things that I want to kind of wrap this up as far as the Flagstar part of this is A, where do you see the broker model going into 2019? Do you see that expanding as it has? Why do you see it expanding? And then we'll talk about some of your product offerings, which I think are a space that you guys win.
Sure. So first of all, it's evident. It's the data shows the broker channel as a whole is growing. Right, it has grown significantly.
Why do you think that is?
I think there's a lot of moving parts there. I think first and foremost, there's companies. Again, I'll tip my hat to UWM. I have a lot of respect for what those guys have built over there.
Yeah,
they've made it. Their process, their technology, the way they kind of built their businesses made it easy for a startup to enter that space. So, part of the challenge in growing any channel is you got to have ease of entry, and so there's folks like UWM and others that have kind of helped that process along. I think there's technology is certainly driving this initiative, and it's not one lender's technology. It's kind of technology across our industry. Everything from point of sale, technology like Roostify, Blend, et cetera, all the way kind of through the lender's technology have allowed the individual originator to compete and to, an LO at its heart is a very entrepreneurial person, right? They're a business owner.
Within
whether they're in
space,
a retail shop or a bank or an individual broker shop. And so there's technology now available kind of from the entire life cycle that allows that loan officer to compete at some level with the biggest of the big in the industry.
I think, too, the writing's been on the wall for the past 4 years that rates will rise, right? So people are, making $300-400 a pop on a loan at a retail shop are like, man, I can do a quarter of the business and make the same money I'm making now, right? So might as well go open my own shop.
Margins are going to be higher at a broker shop just because they don't have the overhead.
Retail,
right?
Lower probably, lower margins, better pricing.
Yes.
I think the biggest thing that has pushed and driven the broker side up, I believe. I mean, there's a lot of reasons, but I think in my mind, it's been technology, like you said, and then service and some negative connotation to banks from the bailout and then like the data breaches like with Wells Fargo.
Yeah, but dude, brokers have the most negative connotation.
Yeah, but I think it's changing because here's why.
I don't agree with
so
that. I disagree.
3 years ago, refi boom, right? Everyone's doing refinancing, HARP loans, right? Lowering their interest rates. I remember competing against like a Wells Fargo 90-day process on a refi. Relocks, multiple relocks.
We are more nimble.
And I was banging out refis in 10 days. Like, that word spreads very quickly, right? You look online at some of those reviews from 2-3 years ago, and I think that has had a significant impact in people shying away from retail.
Let's be honest with it. Like the regular consumer doesn't know the difference right now, man. Like if you tell someone you're a broker right now, they're like, "What does that mean?"
Yeah, they don't.
Can I get a mortgage through you?
Or they think it's not good.
Or they think it's not
you're
good.
a middleman.
Yeah.
So it's
dude,
it
at
becomes
Quicken,
a little
I
more
sold against
difficult.
brokers all the time. Like, why would you
100%,
go
I
to the
did too.
middleman? Why wouldn't you go straight to the
You
cow
know,
for the milk?
And it's always nice though because it's hey, proof's in the numbers,
That's
right?
right, yep.
Look at the LE. Get an LE.
Do you guys service a lot of your portfolio?
We do. We service everything.
Yeah.
And so what I'll describe is, there's servicing loans, and then there's owning the underlying asset, the servicing asset itself,
Yes.
right?
Yes.
And so we do all of that. And so being a community bank, and so we talked about a lot of the benefits of being a bank versus a non-bank. There's some challenges of being a bank, and particularly being a size community bank that we are. There's a certain level of certain assets we can hold on balance sheet to be in compliance, right? And so MSRs, mortgage servicing rights, fall into that asset base. And so we are constantly managing our balance sheet with respect to how much of
You can't hold too much
That's
servicing, right?
Yeah.
That's
so we've structured some very interesting transactions and relationships where we sold the underlying asset, and then we retain the physical servicing
Correct.
part, the
They're making
transactional
the payments
servicing.
to you, right?
And so, I think in one of the rankings that we didn't talk about is we're a top 5 mortgage subservicer in our industry, which means we service loans for others who own the assets, right? And so,
Which is interesting. Think about that, right? Somebody else, but you guys run the payroll, the payments. You run everything.
yeah. So
through systems.
to the consumer, I think what's important for us and for the audience and for originators that transact and sell loans or bring loans to Flagstar. One of the most frustrating things in our business for a consumer, and we're all consumers, right? If we have a mortgage, we're a customer. Is when your loan gets transferred and the servicing gets transferred. It's like, oh my God, I got to reset this up and do
Right,
that.
and miss payments because they didn't tell you whatever it is, right?
So in our,
Or then
in
they
our
adjust your escrow. and-
Stop.
Oh yeah. It's just it's never ending. So for us, for Flagstar, when we fund a loan from a mortgage broker or buy a loan from a correspondent, the underlying servicing on that loan stays with Flagstar, even if the asset itself has been sold to another party.
Yeah.
And so there's just this continuity for the borrower.
That's
that's
strong.
comforting.
Well, let me ask you this, because there's a lot of talk about this, and this is the last thing I want to talk about, and then we'll get to our topics. But there's a lot of talk in our industry that says, okay, well, if I do my business with Quicken or Flagstar, well, when they want to go and they want to refinance, well, they're just going to take that because they're going to churn their book, which is, it's a money-making prospect for any big company. So it's difficult to say, well, we'll never do that. But so tell me, how does Flagstar handle that?
So first, what I would say on the quote unquote churning of the book, it's I talked about the MSR being an asset, right, for whoever is owning it. That asset gets put on the balance sheet for whoever the owner is at kind of fair market value on day one, and then the cash flows received as payments are made against that asset is really the value.
That's the value.
So if you book the value, if you book an asset on day one and only collect payments for 10 months or 18 months or whatever it is, and then that loan pays off and goes away, you then have to write down the remainder of the
you haven't
value.
made that much money, right? Yeah.
And so
It's not profitable at that point.
that's right.
Yeah.
If you think about what we do in wholesale and as an investor on the correspondent side, the rate sheets that we all put out every day has, a component of the price on that rate sheet comes from Fannie Mae or Freddie Mac or Ginnie Mae. So we're all kind of
Tied to that,
going
right.
to the same market there. There's obviously the margin that we put in because we're not a non-for-profit. We're
No,
all,
you're a profit,
we're all in it
for-profit,
to do well.
Yeah.
And then the last component, which is a sizable component, is the servicing value of that transaction, of that loan itself.
Yeah.
And so we front the 100% of that value into our rate sheet
Right.
with the expectation that over time
Will perform.
it's going to pay us back in cash flow, right? So when loans pay off earlier than modeled, then there is an actual write down against that asset. And so, I think this is a topic that has gotten a lot of press. It's been out there, quite a bit in the last 18 months or so. So you kind of asked, how does Flagstar handle that? So we have a group of folks that is monitoring our servicing portfolio and looking at when a borrower raises their hand, i.e., has mortgage credit pulled, somewhere.
Yeah.
And so that's the first cue that something may be happening with that particular borrower.
Yeah, just so the audience knows, when you get your credit pulled, everybody knows.
Yeah, it's
It's public knowledge.
yeah.
Credit bureaus sell that information.
Yeah.
That's right.
Yeah.
That's why you get credit pulled, you get all that mail.
Yeah, it's instantaneous, right? So we have a process where we we'll put that into our retention group and have a campaign to get in touch with that borrower and understand what they're doing, why they're doing it, what are they trying to do. And if we can get involved in that and try to retain the servicing, the value of that servicing on our balance sheet, we'll do that.
From the retail aspect.
Yes. We have a limited program where we share some of that with our broker clients.
Yeah.
But I explained that we sell the asset to other, asset holders. And so the loans that we subservice for those asset holders, we're obligated under that agreement to do that, perform that retention work on their behalf. What I would kind of tell, our audience, and I talk to our customers, our brokers all the time, is the same tools that Flagstar and others have to monitor servicing. Y'all have access to those same tools, and your best approach would be to monitor your customers and watch what they do.
I love that because the
Own
first
that.
person to say you need to watch your clients.
Yeah.
You need to be on top of your clients, right?
Yeah,
Because
yes and no.
realistic-
I agree. We should be on top of our own book. 100% agree with that. But to say that the same tools that you use, we can use as well, that's super unfair because you're the big guy, we're the small guy. We don't have millions of dollars
There's
to
probably
go out
scale. There's
and
probably
spend
scale for
all this
sure.
money on credit triggers, right?
But you
and
do
all
have
that.
a phone. I mean,
100%
that to
agree.
me is the big thing. With this whole hotel versus retail thing, and I've
100%.
gotten some flack for it. But at the end of the day, I mean, if you want your customer to be your customer, you have to stay on top
There's
of them.
no
and it doesn't
guarantee
matter
they're
if
gonna-
Flagstar or Quicken,
Because they could walk into Bank
Chase.
of America tomorrow.
Yeah,
Doesn't matter
right.
where they go.
I
To
have
me,
clients,
it's not so much whether you guys do or don't do a retention side of the business, but I agree wholeheartedly with your point that we should be on top of our own book.
Right.
It's our business.
We're running out of time. So real quick before I've got a couple topics I want to talk about, but I want you to tell us, because one thing that Flagstar does really, really well is you guys have awesome programs.
Yeah.
Really good programs that a lot of other places don't. Your jumbo products are really good. You've got a doctor's loan. You're able to tailor different products because you are a bank, because they are your assets. So talk to me a little bit about some of the products that you have that can actually help a broker just give them more tools in their toolbox, because that's what we need.
Sure. So obviously we all have Fannie, Freddie,
Sure.
Ginnie Mae, FHA, VA.
Yep.
So we'll just kind of take the 75% of the business that's being done out there and assume and understand that we have similar products that the industry offers. From a non-agency perspective today, you mentioned jumbo. So non-agency jumbo today is a product that is a strength for Flagstar. So that's a product that we actually have our own guidelines. Obviously, we underwrite those loans. We'll do it on a broker transaction, or we'll purchase from correspondents. And then we package those loans up and have our own securitization. So we're taking that directly to Wall Street under the Flagstar, securitization shelf, and bringing meaningful liquidity to the third party space in that product.
So it's not going to a Redwood or
That's right.
Okay.
Yeah, this is a Flagstar product.
It's not a third party, right?
Yeah, the fixed rate product is a securitized product. So we're taking that and selling it to investors, institutional investors, et
And just so
cetera.
the audience understands, the reason that a lot of brokers or lenders that are smaller don't have great jumbo pricing is because as a bank, a lot of times, if a Wells Fargo, you've got $1 million in assets with them, well, they're gonna blow
Yeah.
out the rate for you. They don't care. They
or if
just
you
want-
don't have $1 million in assets with them, but
you
you
will put
ha-
it right.
you can put it with them.
Right.
They're trying to attract.
So how
that
are the interest rates on your jumbo products comparatively speaking to the market?
Yeah, so the first thing I would ask is, who are you comparing us to? Right.
Right.
Because you mentioned the big box banks, and if they have an appetite for a certain
They're not-
type of customer, it's going to be tough to compete.
They don't care, right?
So if you set aside kind of that retail big box bank appetite for that asset, then our product is right there competing, day in and day out. And I think what we like to talk about is that the product's great, but it's really wrapped around the ability to execute and get the loan for the consumer. So the service that we kind of
It's
wrap
always the
around it
number
is
one,
key, right?
Yeah.
We view our role as we need to make our customers look good to their referral source, their customer, so that they get return business, right? So
Yeah,
we could have a great product, but if we can't execute on it, then nobody wins.
that's across the board. Go ahead.
How do the third party jumbo rates compare to your retail jumbo rates? Because I think retail is probably trying to attract that customer to get their assets, right?
Yeah.
And I don't.
Yeah,
I don't
no.
want to put you on a
No,
spot.
no,
I don't,
that's
I'm curious.
I think you just said it. I mean, it's
He
gonna
said
be-
compared to other
Yeah, what I
people on the market.
would tell you is that we produce a wholesale rate sheet that in and of itself is priced lower, if you will, than retail.
Right.
It really depends on the markup that our client puts on that product.
What's their margin going to be on top of your margin? Right.
Gotcha.
So
It's not really fair to compare
Yeah, no,
the
that
whole,
makes-
you know,
yeah,
the
I
I
wholesale
think
to
that's
retail.
It's an
as an
impossible
outlaw or
part.
a broker, you know, I mean, you have to come to terms that you might make a point less on these jumbo deals than you would on your retail deals. You can't look at jumbos as a money grab.
make
It's more or less.
$25,000.
It doesn't.
Yeah.
You're not gonna.
You gotta be
No one.
competitive.
You're never gonna get the deal.
No, especially in
Right.
today's market, margins are getting tighter. Another product that you guys have that I think you guys do a really good job with is new construction.
Yeah.
So one-time close, new construction. Historically speaking, that we don't have a really good product on our end to do that. And we get beat on that all the time. So talk to me about your one-time close.
So we have a suite of construction and renovation products, right? So we offer all of the agency reno products, and then on top of that, we rolled out about 18 months ago the Fannie Mae one-time close construction. So and
That's
that
new to the market, isn't it?
it's,
Fairly new.
it's a product that's been out there, but it hasn't been readily offered by folks like
Yeah,
Flagstar
yeah. Right.
to the third parties. And so we took that product and we set it up so that it's competitive. So it's a 90 LTV. We retain the credit risk on that, and so you've got the loan closes, the third party, the broker is either funded at closing or the correspondent is fully paid at closing when we buy the loan. And then we take that loan through the draw process.
Which
that
is
borrower
dangerous
through the
because
draw
if something
process.
happens during the construction,
Yeah.
I mean, it's not a
You guys are taking
it's
some
not a
risk on
comfortable
that.
position.
Yeah,
to
we
be in.
own the credit risk on that consumer
Yeah.
because they have to requalify.
That's why a lot of people don't do it.
That's right.
Right? Because you all of a sudden you close on the deal.
Yep.
The house isn't built yet, and something goes wrong, you're stuck with it.
Yeah, for the consumers that may be listening, and this is for all, I'll speak on behalf of all of our lenders that are out there. When you close on a construction loan, don't go buy a car.
Oh,
Don't go buy furniture. Don't open up additional credit. Right? It's-
Yeah. Well, I bought 3 cars.
Yeah.
Okay, dude. Thanks. Well,
Got to fill up that 3-car
yeah.
garage that's
Yeah.
not built yet.
Yeah.
So just to piggyback on the construction, so I talk about the agency, the Fannie Mae construction product that Flagstar offers. We also have a jumbo one-time close. So that's really brand new to the market,
Wow,
and that's
okay.
unique for Flagstar.
Yeah.
So now we're in that same space with the same product now on jumbo loan balances up
That's
to $1.5
awesome.
million.
That's awesome. So I think all in all, just to wrap it up, before we get to, there's 2 things I want to talk about, but I mean, just Flagstar has done a really good job diversifying their business. They're super solid. They're a local Metro Detroit company that has really built a good business, and it's been organic, and it hasn't been like flashy. And, it might not be the sexiest the mortgage company out there in that aspect, but it's just solid.
They're
You
not
guys have
getting
done
all
really
the back and forth media attention, and they're kind of
They're
flying on the radar
Switzerland.
and being solid.
They're Switzerland.
We're,
We're
uh,
just going to do our thing.
We're very
Sweden.
focused on
Sweden. That's right.
We're very focused on doing the right thing.
Yeah.
And so we don't need a lot of fanfare.
Yeah.
We're a lean, mean organization, and we're here again to make our customers look good. On the third party side, we're only as good as our customers. So
Yeah, that's awesome. That's
So
awesome.
where are your primary markets? Do you lend in all 50 states?
yeah. So
Sorry, I just because I know you said you had
go
acquired
ahead,
some
yeah,
branches.
yeah. We're
in California
on the
right?
mortgage side, and specifically on the third party side, we're in all
Because you're
states.
FDIC.
Yeah. Yeah.
Is there any way for a broker shop like us to ever connect to your licensing, be able to do loans in all 50
Dude,
states?
oh.
I would love that. I would love if all 50 state solution for a company like us.
Yeah.
There just isn't one.
There is. Unfortunately, you'd have to be a branch.
Right. So the audience
Or have really deep pockets.
just so
Yeah.
the audience understands, as a mortgage company, you have to be licensed in every single state individually and go one by one, and every state has different rules, different bond requirements. So it's a very, very big tax. Now, as a bank, when you're FDIC, you're automatically across
We have a
the
federal
country.
exemption,
Right.
right.
You're they're exempt. They can do loans all across the country. So that's why a lot of companies, even Quicken at one point, was talking about opening a bank because it does create a path to that.
That's
Well, it's
right.
not even just the entity itself; it's all the loan officers that in your retail they
Yeah.
don't need to be licensed in every state,
Right.
whereas
Right.
like all of our loan officers have to be licensed in every single state.
Correct.
Yeah.
Correct. All right. So obviously we'll get back to some of that. Just 2 things I want to talk about. The recession is coming, and a lot of people are like, "Oh, the housing markets usually do well in recession." So we're going to talk about that. And then just the other thing I want to talk about is somebody's calling for rates to actually go higher instead of the Fed cutting, because the Fed are the market's kind of shaky right now. So let's go into that.
Just a little bit.
The market's shaky right now. We've seen a huge drop in the Dow. President Trump and a lot of other people have said, raising rates on the Fed side is just dangerous right now because it's going to create instability. But then they backed themselves in a corner. They can't not raise them now, right? Because if they don't, that'll create chaos. So the question is, what's
a little more chaos?
Right. What this guy is basically saying, we need to raise rates more to give us a buffer. So if anything does go down, we can use that as a governor for the market. When a lot of other people are saying we don't want to raise rates and hurt the market. What do you think about that?
So I'll start by saying, I'm not a economist,
right?
And
right.
I don't pretend to play one.
We're just pretending,
on TV or on podcasts for that matter. I think the fact of the matter is we're going to be in a rising rate environment. It's been due for our industry and for the economy for several years, right? It's just been an ongoing inevitability. Fundamentally, I couldn't tell you what the fundamentals are underneath the market. There's so much chaos, that gets created. I think yesterday there was probably a little chaos.
Dude, it's all human
DC.
emotion. That's the weird thing about the market is what I think is like it's so human emotion because think about it. Like every day people are talking about the recession. Every day somebody's saying there's going to be a recession. Well, if I woke up every day and told myself I was going to have a horrible day, I'm going to have a horrible day, right? At some point, it's a self-fulfilling prophecy, right?
I think for our industry and for us as originators, the best thing we can do is focus on what we do well, which is, nurture and establish relationships with consumers and try to help them not be fixated on a number, a rate.
Yeah.
If they're buying a house, they have a desire to buy a house.
There's a need.
Our job is to help them finance that transaction, right? And not fixate on what the market's going to do. If you're in the market to buy a house,
it's so specific to you.
It's time. It's your time.
Yeah. Don't look at it as an investment. That's what you need. Like this is something that you're doing. A house. Look.
And when they come back down, you can refi.
You can refi.
So it's kind of like do it or don't.
Right.
But don't do it because of a rate.
That's right. And and we see our business shifts when there's a little bit of chaos in the market because consumers either freak out and slow down.
There are
and
companies
hit the brakes or the other way.
What's crazy is there are companies that are so big that when their CEO gets arrested, it affects the global economy. Yeah. I mean, think of that. What was it, Huawei or
Huawei?
Yeah, in
You know what happened with that, by the way? She got $10 million bond, and people in Vancouver, like citizens that were Chinese citizens that were living in Vancouver, put up their houses as collateral to come up with the money for her to get bailed out. Like these are people are like, I'm going to give her $50,000. I'm going to give her $300,000. I'm going to give her $400,000. I'm going to give her $1 million. All these people pulled all their money together because apparently they all either work for her or know her. She's kind of like a national hero back in China. So like people are trying really hard to like help her, which is interesting, which kind of speaks volumes potentially on who she is. Yeah. So I'm wondering what's going to happen with that. That's going to be interesting to see.
Well, they always say follow the money, right?
That's a good point. If people have money to do that. Another article which I thought was really interesting, it was on CNBC. Basically, it's a conversation. We all talk about what happened in 2008 during the recession, and they had the implosion of the housing market. And how a lot of people are almost implying that that's going to happen in the next recession. What people don't understand is I think 2008 was very anomalous. And generally speaking, since the 1980s, the housing market was actually a great place to put your money through recessions.
Right.
We just had a 2008 where we had a lot of speculation, a lot of bad loans. Coming out of that,
people made a ton of money.
Yeah, I think you said speculation. I think that was
huge.
One of the underlying key contributors was the amount of speculation that was in the housing market. So these weren't homeowners, primary occupancy homeowners. These were investors, and frankly, a lot of people that had no business investing in real estate were getting into real estate because it was the barrier to entry was basically nothing.
And couple that with a garbage truck driver buying a $500,000 a house because we could just state his income or no income. No. Yeah. There were also a lot of fringy loans. So we're in a much, much different environment, people. So these people that are waiting for the implosion of the housing market and waiting to see what happened like in 2008, I don't see that happening.
Yeah, today's
see a correction, not an implosion.
No, dude.
Right. Today's like market is. Go ahead.
Next crash, we're gonna buy tons of properties and flip them, and it's like.
I think that one that wave kind of hit the beach and it's over.
It's over, bro. We'll see a correction potentially, but it'll be a safe place to put your money because think about this: the housing market is so resilient that after 2008, the rebound was ridiculous. Even after the most like hellacious implosion of the housing market of all time, we're okay.
That's right.
Right? So
Yeah.
think about how resilient and how important the housing market is to our economy. It speaks volumes. Okay, so those are just some things I want to talk about. We're going to do 3 questions with Brian View.
All right.
You ready?
Oh boy.
All right. So
We didn't prep for these.
No. This is totally off the cuff. So, what scares Brian View?
Oh wow. A lot of things. So I don't sleep well at night because there's so much going on in our business that I don't know about. Right. I don't know what the guys down the street on either side of us are cooking up in their laboratory. Right.
Yeah.
So for me, I'm always thinking about what can we be doing and developing and working on to make sure that we stay relevant. And so I guess I would say my fear would be not being relevant
Not being relevant. Okay, good.
in my personal life and in professional life.
I think yeah. That's I think that's fair. It's tougher for you, Brad. Next question: How proud of you? How proud are you of Cam, your son, who plays in the minors?
Oh wow, yeah, we did not prep for this. So I'll start by saying I'm proud of all my kids.
Yeah.
Obviously,
Right,
and
of course.
And so Cam finished his 3rd year of professional baseball. He played at Michigan State, go Green. Was drafted by the Pittsburgh Pirates 3 years ago, and we're extremely proud of him.
He's a pitcher, by the way.
He's a pitcher.
Yeah.
He's a minor league pitcher, so he's not making any money.
Of course, no.
So-
You're paying for it.
Having lots of fun, though.
Right now, living in my basement,
Yeah.
so really looking forward to the day when he can make some money and kind of get out there. But we enjoy kind of watching him chase the dream. It's a process. There's nothing glamorous about minor league baseball.
man,
It makes what we do look pretty easy, actually.
Right.
Yeah.
Oh, who do we have? We had
Dirks.
Andy. He was on our show before.
Yeah.
So he's a
grinder. He
He's
was a grinder.
Grinder,
Yeah.
dude. And he talked about that. He's like, dude, I wasn't like great. I just worked really hard and tried to be good at everything, which
Yeah.
was, it was an interesting. He's a very smart dude, and anybody that follows him at all, he does a lot to talk about kind of the mindset. And one thing that we picked up from him is like we started like complaining about stuff, and you know what he says? He goes, dude, play better.
That's right.
Just
That's
play
right.
better.
Yeah. And he's doing he's training kids now on the east side, I think.
Yeah.
He's got a great little deal going.
He's awesome. He's an awesome dude. And then last question. It's kind of tell us about the downtown boxing gym youth program that you're involved in.
Yeah, thank you. So I got involved with the downtown boxing gym a little over a year ago. I'm on the board, and if you guys haven't checked it out, let me know. I'd love to take you down there and give you a tour.
Yeah, I haven't.
This
I've
is
never heard of it.
Kali Sweeney is the founder, and his story is phenomenal. Google the gym, Google Kali Sweeney. Look at his story. The guy didn't graduate high school.
Yeah.
He was basically at a point in his life where, in his mind, he had 2 options. He was going to be dead or in jail.
Yeah.
And he couldn't read, and took it upon himself to get help and learn to read, and he built a small gym, and his mission became to help kids like him when he was growing up have an outlet. And so for him, the outlet was boxing, and that led to self-esteem, confidence, and then the desire to kind of learn to read and be productive that way. And so he started in a small gym, probably not much bigger than this studio, just training kids one-on-one. And the training that he did was, 30% boxing and 70% mentoring and giving them confidence and then bringing in some resources to help them with school studies. And so now you go into the gym, there's 150 kids that come to the gym every day. They get picked up from school. They come to the gym. They get a physical workout. And again, it's 30% of their afternoon is the physical workout, and then they have a rigorous academic afternoon
That's
across
awesome.
all subjects. It's phenomenal.
How'd you get involved with that?
So one of our board members at Flagstar had a friend who was on the board, and they were looking to fill some board seats, and I've been looking for the right board participation, if you will.
Yeah.
And I have a passion for youth sports and kids, and so I went down there one day, got a tour, and basically begged them to take me on the board.
That's
So,
awesome,
yeah,
man. That's
yeah.
awesome. And by the way, you also did coach at Walled Lake Western.
I did.
Yeah.
I coached a little football.
Yeah. By the way, so Walled Lake Western was so when I was in high school, we went to the back then the Silver Dome, which was the state championships.
Yeah.
Right, we were playing Stevenson. We played Walled Lake Western, and we were absolutely not. We were a good team. We were not prepared for your quarterback. You guys had this quarterback. He was a bad little dude.
Yeah.
He ran. I mean, he didn't throw the ball too far. I mean, he just ran all over us. And then we had I'm going way back, but we had a freshman kicker, Dunlap, who was in the end zone. This is how we lost the game. Freshman kicker was backed up in the end zone. He's kicking out of the end zone, and they blocked they blocked the punt and scored a touchdown, and that's how they won. And I'll never
Was
forget
that
it.
96 or 99?
99.
Yeah.
No,
I wasn't there.
it was 96. It was
Yeah.
99. I was out of school. Yeah.
Yeah, so Western was probably running the wing tee. back
Yeah,
then.
yeah, oh yeah, exactly. We didn't know what what it
Right.
was. We're like, what is going on
Yeah,
right
yeah,
now?
yeah.
There's people running all over the place. We didn't understand it.
Yeah.
You know, after playing like a team like Catholic Central that just beats you up.
Right.
Anyways, that's off topic.
Yeah. You did your research, man.
Yeah.
Hopefully that's where the list ends.
That's it. We're all done. We don't know anything about your college girlfriends. So that's it, guys. I mean, that was a good show. Thank you so much,
Yeah.
dude, for coming on the show. If someone wants to get a hold of Flagstar to set up, a correspondent line or anything,
Yeah.
how do they get a hold of you guys?
So I'm on LinkedIn, Brian View, or you can email me, brian.view, VIEAUX, @flagstar.com. I'm sure you guys will.
yeah, we'll blast
Put
it out.
something out there.
Yeah, for sure.
Yeah.
So that's it.
Thanks, guys. Thanks for having me.
So, Brad, are we going to sign up with Flagstar now?
Tomorrow.
We'll
I'll be in your
take it
office
off
tomorrow.
All right, everybody. Thank you so much for listening. Again, please subscribe to our show, like it, share it. It really allows us to bring really
Review
good
it,
content.
rate
View it.
View
It's
it.
called.
Yeah, we can view it.
That's a play on words.
Brian, view it. Love you guys. Have a wonderful day. Goodbye.
Listening to Inside Real Estate, the nation's top real estate podcast. Don't forget to follow
Yeah,
us
flew by.
at irepodcast.com and everywhere where podcasts are available.